Hello and welcome everyone. If you're tuning in live or catching the replay, let me know by typing live or replay in the chat box. I'm thrilled to have you all here today. We are diving into a crucial topic that resonates with every Indian investor: tax planning basics for generational wealth creation. Before we go ahead, I have an exciting news for you. Mark your calendars for Saturday, 20th January at 11 a.m. because we are hosting an exclusive webinar on tax planning with CA Sanika Vankatia, Director of Prospero Wealth Private Limited. It's an opportunity you don't want to miss, and I encourage you to invite your friends and relatives to join in. Now let's get started. And as we proceed, I would love to hear from you. So feel free to answer this. Have you ever considered how tax planning can impact your financial goals? Type yes or no in the chat box. Thank you. Basic tax planning strategies. Let's understand why tax planning is essential for every investor. It's not just about saving money, it's about strategically growing and protecting your wealth for future generations. Sorry. Understand your tax bracket. Knowing which tax bracket you fall into is the first step. It helps in planning your investment and income to utilize the maximum tax benefit. Invest in tax saving instruments. Options like ELSs, PPF, and NSC not only saves taxes under Section 80C but also contribute to your long term wealth. There is a cap of 1,50,000 over here. Utilize deductions and exemptions. Be aware of deductions like health insurance premium, which you can claim under Section 80D, and education loan interest, which you can claim under Section 80E, and others. Think long term. Investments like equity mutual fund. When you hold it for more than a year, offer tax benefit on long term capital gains. Regularly review and plan. Tax laws keeps changing, so your strategy should change. An annual review of your tax plan is very crucial. Effective tax planning directly influences your financial goals. By saving on taxes, you free more resources to invest in your wealth creation journey. It's not just about the present savings, but it's also amplifying your financial wealth. So tax planning is not just about saving taxes, it's a strategic approach to align your investments with your financial goals. So, there can be short term goals or long term goals. The goals like buying a car or going on a vacation, they are the short term goals. Now, here the tax saving instruments can be ideal, which are of 3 years period. Long term goals like for long term aspirations like buying a home or sponsoring your child's education, you can offer investments like PPF and ELSS, which offer growth over a longer period. By reducing your tax liability, you not only free up more funds to invest towards your goal, you also accelerate your journey to financial independence. So now let's look at how can you basically save the taxes step by step by taking an example. Let's take a real life example. Mr. Raj, he is 35 years old and working in IT. So, if you assess his financial status, Raj is right now earning 15 lakhs rupees per year, and this puts him in a higher tax bracket. He has short term goals like a family vacation and a long term goal like his children's education. So, what he does, he chooses the right investment. He invests into ELSs, PPF, and NSC. He also buys health insurance for his family and term insurance for himself. So by doing this, he's taking the advantage of ATC. Maximizing deduction by doing so, Raj not only reduces his taxable income significantly, but he is also saving a substantial amount in taxes every year. Reinvesting the tax savings. So, what he does normally, he invests these savings into mutual funds and fixed deposit. That means the tax which you would have paid, he saves here so that he can map some of his financial goals. Through this strategy, Raj not only saves on the taxes, but also he ensures that he's building a robust financial future for his family. So there is a famous quote by Benjamin Franklin. He says that in the world, nothing is certain except death and taxes. But let's add a twist to it. With smart tax planning, we can make sure that taxes don't come into our journey of financial freedom. So I want to ask you, all of you, a question. How many of you have a tax planning strategy in place? Type I have or I need one in the chat box. Your responses will help us understand our audiences better. Also, what's your biggest challenge when it comes to tax planning? Share your thoughts in the chat box. We are here to help and learn from each other. So, let me remind you again. So, as we discuss the strategies, remember the upcoming webinar with Sanika on 20th of January. It's a golden opportunity to deepen your understanding and ask questions directly to her. So, make sure to register and invite your network. The link will be provided in the chat box. So, we are here more to learn and the better we grow together. So, in conclusion, tax planning is an important element in creating generational wealth. It's not just about saving money today, it's about securing a prosperous future for your family. Remember, every rupee saved in taxes is a rupee that you can grow in your investment. Sorry. I urge you all to join us in the upcoming webinar for more detailed insights. And before we wrap up, if you found this session helpful, type valuable in the chat box. Your feedback is important to us. Thank you for joining me and stay informed, stay invested, and let's build a legacy of wealth together.